Continuing on with Chapter 10, in Exercise 10-7, we're going to look at issuing stocks again and buying back some of the stocks that we issue. That is, a corporation that issued the stock buys back their own shares. So here we have finishing touches that has two classes of authorized stock, 8% $10 par value preferred stock and $1 par value common stock. On Jan 2nd, they issued 100,000 shares of common stock for $35 per share. Remember, the par value is $1 per share. They sold it for $34 in excess of par. So let's take a look at the journal entry over here. We have on Jan 2nd, we've received cash. The cash we received is 100,000 times 35. So the total amount of cash we received is $3.5 million. I can credit my common stock only $1 per share. 100,000 times 1, that's how much I'm going to credit my common shares. So the extra monies that I receive, all of that is going towards paid-in capital in excess of par or additional paid-in capital. So it's paid in capital, it's paid by the investors, it's given by the investors, but it's an additional amount in addition to the par value. So at this point of time, I'm just keeping a track of how many shares I've issued. I've issued 100,000 common shares. This is the number of shares. The total money I collected is $3.5 million. Next month, on the 6th of Feb, I issued 3,000 shares of 8% preferred stock for $11 per share. What was the par value? $10 per share. I sold it for $1 above par value. I'm saying whenever dividend is paid out, the preferred stockholders will get 8% of $10. That's going to be in the future. For now, I received cash, so I'm going to debit cash. 3,000 shares times 11. That's how much cash I received. That's $33,000. Again, I can credit the stock. This time it's preferred stock only to the extent of par value. The par value is $10 per share. So $10 times 3,000, that's how much credit my preferred stock. I received an extra $3,000. That goes to additional paid-in capital. So now, next thing I'm going to look at over here is how many shares I've issued. It's 3,000 over here for the preferred shares. It was 10,000 over here, 100,000 common stock and 3,000 preferred shares have been issued. A few months later, we decide to purchase 11,000 of our own shares. We paid $40 on the market and bought our own shares back. When we bring the shares, we are keeping it with us. So the name we use is Treasury stock. We call it Treasury stock. So there are a variety of reasons why I may buy the stock. We'll talk about that in a second. First, let me do my journal entry. I don't call it common stock. I call it Treasury stock when I buy back my own shares. I bought 11,000 of the 100,000 I issued. I bought back 11,000. I paid $40 per share. So I paid $440,000. So why would I buy back my own shares? A variety of reasons I may buy back my own shares. I'm afraid that someone else is buying the shares and they could get control of the company. I don't want that. Remember, you need only 51% of the shares to control the company. So if I see someone else is gathering up and buying a lot of shares, I may buy it back. What could I do with these shares I buy back? Anything. I can sell them again. I can gift them. Typically, I would give it to my employees. So that's another reason why I may buy it back. So there are many, many reasons why a company would buy back the shares. So now what happens to the shares over here? It's the shares outstanding. The word outstanding means held by the public. That drops from 100,000, it drops by 11 to 89,000. Why that is important to keep a track of is when I pay dividends, I pay dividends only to outstanding shares, not to myself. If I have it in Treasury, I don't pay myself dividends. I have to pay dividends only to the shares outstanding held by the public, not me. So that's the reason I want to keep a track of these numbers over here. December 15th, we decide to sell 5,500 shares of treasury stock, and we're going to sell it for $45. We bought it at 40. We are selling it at 45. So this is definitely a good situation to be in. So let's see how I do my journal entries. I received cash, so I debit cash. I credit treasury stock. How much cash did I receive? 5,500 times 45. That's how much cash I received. Treasury stock, what did I buy it at? $40 a piece. So what I will credit is 5,500 times 40. What I paid for, that's what I'm taking it out from my books at. So this extra money that I got, I put it into that additional paid-in capital. Whoever bought those shares from me, that's how much they paid. Now, for me, the additional paid-in capital, I'm comparing it to what I paid for. If you go back to what did the par value, it's only $1. I sold it for how much? I'd sold it for 35. But that's not what I'm concerned with over here. Here, what I'm concerned with is how much did I buy it back for, the treasury stock? I bought it for 40. I'm selling it for 45. So I got an extra 27,500. That's called additional paid-in capital. So now again, the treasury, let's do the update our number. 5,500 is back out over there. So finally, the number of shares that I have outstanding at the end of the year are 94,500 shares. So if I were to prepare this statement of stockholders' equity section, we have not been asked in this exercise, but let me go ahead and do that and see what it's going to look like. I have my common shares. It's going to be $100,000. That's this number that we have here, $100,000. Next, I'll list my preferred shares, and I will write the number that I have there. That's 30,000. Preferred shares that I count as 30,000. Next, I will write down the additional paid-in capital. So the additional paid-in capital we have here. Obviously, if you have a D account, you'll have those numbers updated. But I'm looking at 3 times additional paid-in capital is credited. Add those numbers together, and we have 3,430,500. So that's how much we have. Okay, so my total paid-in capital, this is how much I collected from stockholders. Common stockholders, preferred stockholders, people who bought the common stock that I was reissuing, all of that put together is 3,560,500. I still have to list that treasury stock. Treasury stock is a contra equity account. Equity account, all of these have credit balances. Treasury stock has a debit balance, so I subtract that number, and that's my final number that I have as stockholders' equity. Total stockholders' equity, the total amount I have is 3,340,500. So once again, I will list my common stock and my preferred stock, if any. They'll be listed at par. I will list the additional paid-in capital. All that put together is the total paid-in capital. Subtract your treasury stock, and that gives you the total stockholders' equity section.